Hello everyone and a big welcome to R J Sanderson TV, episode 5 here of 2022, and it's my great pleasure to wish a happy new year to my co-host Roy Sanderson. Roy, we're into FY 22-23 and tax time, it's already ramping up for you guys.
Thanks Dave, yes it's a great time. Middle of July we get very busy. The Australian Taxation Office have all their records up on the ATO portal for the accountants to access. That includes the income statement, dividends, interest, private medical stuff. So we get the income information, we just need to focus on the expenses with our clients to maximise their refund.
Is now a good time to get your tax return done, or is there anything that we need to consider before going and seeing you?
Once we get to the middle of July, it's okay to start thinking about your tax return because you should have the information. But if you've got a rental property or you've got share investments in certain investments, then it might be worth waiting a little bit until you get that information.
All right, Roy, plenty going on in the world and here in Victoria. So let's get into our economic indicators as we do each time on R J Sanderson TV. And the big story, once again, is interest rates. They are up again for a third straight month, and we're now sitting at 1.35%. You know, a lot of community concern about these increases in interest rates, Roy.
Yes, and it looks like all the talk is that there's going to be further increases. So I think it's a case of watch this space.
Looking at that graph, you can see how flat it was throughout most of 2020 and 2021. We talked about, you know, this pressure that was going to come on inflation, you know, with regards to all the stimulus that was out there. You know, do you think that the RBA should have acted sooner with a more gradual increase as opposed to this very steep increase in interest rates, which is going to hit mortgages quite hard over a very short amount of time?
I think in hindsight, the Reserve Bank would say, yes, they were too slow, but it's a lot easier in hindsight. And statistics, as we know, are quite often behind the real life, what's happening on the ground. It can be, 2, 3, 4 months before the real statistics are showing up on what's actually really happening out there in the workplace.
Speaking of what's actually happening versus what's predicted to happen, let's have a look at the expected inflation rate, up at 6.7%, I should say. And, this is basically the basis of the Reserve Bank's increase in interest rates or a response to this. The Melbourne Institute coming out with their data suggesting that inflation is about to really go up another gear here in Australia. Let's have a look at the UK inflation rate just for context and for comparison. And you can see the UK now at a 40-year high at 9.1% inflation rate. So we've spoken a lot about inflation rate here in Australia, the inflation rate here over in the US, but you can see in most economies they're experiencing very high levels of inflation. The UK is no exception.
Dave, this supports my view that the Reserve Bank charter is that they increase interest rates to reduce the inflation rate. That's textbook economics that goes back many years when you and I were doing our Bachelor of Business a long time ago. Textbook stuff. But the reality is right at the moment, inflation isn't being caused by too much demand. I think if we went through and listed what's causing the inflation rate to go up, I think it's external factors. It's China supply problems. It is a Ukraine war. It's fuel prices. It is energy prices, cost of power. All these things are what are causing inflation. The fact that we're seeing inflation in the UK and the USA, I think supports that view. It's a worldwide problem. And I think the Reserve Bank need to see that, understand that, and not push interest rates up by much more than what they already are. I would support 0.25% increase next time, but then I think the Reserve Bank should come out and give people certainty so we know what's going to happen and say we're going to leave it flat for the next 6 months.
Yeah, I think that as we know, there's a review going into the RBA. The new government or the new federal government is going to review the RBA and its function. And I mean, that kind of makes sense. This is an organisation or an institution with very few levers, Roy. They can put interest rates up, they can put interest rates down, or they can leave them the same. That's practically all they can do. So in terms of who they hit and directed sort of assistance or targeting in certain areas, they don't have that flexibility. So I think a review into this policy or into the operations of this institution needs to take place, because clearly, as you say, they are creating broad policy solutions or broad solutions to broad problems that are having implications for very specific subsets of the population, and perhaps negative effects that are not the correct way of addressing the problem. One thing that we do talk about on this show a lot is consumer confidence, and it is down again. And I think this is a great representation of how everyone in the economy, or everyone in the community, I should say, is currently feeling. It's down again to 90.4%. And Roy, you can see here that it is now at the index stands at the lowest since April 2020. Now, just for context, April 2020 was when this new thing called COVID-19 was taking over the world and changing the way that we fundamentally operate as a society. So people were understandably very much lacking in confidence. To think that we're now at a similar level to that is very frightening, isn't it?
Frightening, and extraordinary to think that this is where we're at. And we know how bad it felt at the start of COVID, and to think that we're back to, there's something or matters, certain matters, and it could be everything I just mentioned a little while ago about a war and China and prices and labour shortages and all sorts of things, but clearly there's a lot out there that's hitting consumer confidence.
Sometimes the economy can fall on its own sword, with a big event like COVID-19, or sometimes it can suffer death by 1,000 cuts. I feel like it's the latter at the moment. It's this death by 1,000 cuts, and suddenly we've progressively got to this point where we're in a really precarious position. We've talked about where we're at with inflation out of control. We've got interest rates on the increase. We've got fledgling consumer confidence, and we've also got low unemployment, but no opportunity or a potential labour shortage within the market. We're going to talk about that in a sec. But business confidence is another metric that we use to gauge community expectations and community mindsets, and that again is down, put down to easing in sales, profitability and employment.
Yes, and this is, I don't think that's surprising, given that consumer confidence continues to dwindle. I think business confidence is following suit.
We mentioned unemployment, and it is at a historically low level. Now, generally that is a really good situation, but it doesn't feel like the employment situation in Australia is in a good place, because day after day we hear of labour shortages within the community, and we are at historically low unemployment. So, what are we going to do in this space?
This is an interesting problem for Australia, given that we've been so flat at 3.9% for the last 3 months, and we know there's a labour shortage out there, but it creates an interesting point as to where is full employment within Australia. We've got to be close to it, because I know it says 3.9. Full employment is not zero. That's not the case. But it's a number somewhere between 0 and I think 3.9, and maybe closer to 3.9 than 0.
I think the other point to that is, how do you solve a labour shortage? Again, we talk about this idea of there are very few levers at a government's disposal. You can bring the workforce in from overseas, or you can train a new workforce. Now, we understand that training a new workforce is going to take time. We're hearing things in Victoria here about a shortage of ambulance workers. Well, there's no sort of ambulance labour force just sitting on the sidelines doing nothing at the moment. That's part of the problem. To become a paramedic, you need to take years and years of training to get to a level where you can respond to an emergency. So for governments, the challenge is, where do you find this labour force? And how do you solve that problem really quickly? Because training a new labour force locally is going to take a lot of time, and it's potentially going to solve problems 10 years down the track or 15 years down the track, when we need to solve problems right now.
I think we need to take a short-term view and a long-term view. I think we need to have some training policies in place. I think that all training should be tax deductible, and right now it's not. I think that would be a great initiative by the government. But the short-term issue is bring people in who are qualified, trained, educated from overseas and reduce the time rate to get those applications. Today, and we've talked about this before, Dave, today it can take 4 to 6 months from the time you make an application through to the time you hit Australia. So that's got to be reduced. And if that gets reduced, it'll help in the short term. But for the long term, we need training programs in place.
I agree with that. Roy, let's have a look at unemployment by state and just break down that metric a little bit more. You can see there on the bottom row of this table, just an interesting thing. You can see Western Australia at the lowest level of unemployment. There's so many jobs over there with all the infrastructure around mining that goes on in that state. Victoria, though, interestingly, at 3.7% unemployment. That is perhaps at odds with the general narrative that Victoria was hit hardest by the pandemic and lockdowns and all of that. What do you make of that, Roy?
Well, it's interesting. The amount of money that's been spent by Victoria exceeds what's been spent by other states and a number of states combined. They've spent something in the order of $13 billion, and their unemployment rate has dropped to this level. It did peak at around 6.7%. So spending the money was great, but I think we need to ease off on the spending of the money because we just don't have the labour force.
Yeah, it's an interesting question. How much is too much? And then, of course, if you keep putting stimulus out in the economy as well, you add the risk of further pressure on inflation, which we know we've spoken about, and perhaps that's not going to be a massive contributor at a state level when we're talking about a national indicator, but it is something to consider as well, and take your point.
And there's been talk about the $750 pandemic payment if you have COVID. There's been talk that that's going to come back. But what that'll force people to do is say, I can sit back and get $750 each time I'm diagnosed with COVID, and I don't know if that's really what we want, because we need people to be out in the workforce, not sitting at home getting a $750 one-off payment. Yeah,
what's the feeling like generally in the business community about this upcoming period, Roy? Because we know that there is going to be a number of cases. We can see that the data is indicating that there is a lot of community transmission in COVID at the moment. Regulation still says you've got to isolate, etc. So there's going to be shortages within workplaces. What's the general feeling in the business community at the moment?
Like the Consumer Index actually says, I think they're nervous, very nervous. We're hearing from people that they're losing workers to other states because people are nervous about the Victorian government and what they may do because they've got a reputation for lockdowns and mask wearing, and we still have an exodus out of Victoria to other states, and that's a concern for business people who can't get workers.
Yeah, it's an interesting conversation that's going on politically at the moment, because the other day the Victorian government, it was the first time throughout this pandemic that they haven't adopted the national health advice, and that's creating friction on the other side of things, that people are sort of saying, well, now the government's ignoring the health advice, and you can see that there's this fascinating push and pull, and it is inherently complicated for governments, isn't it, Roy? And I feel for them, I feel for business community, I feel for people in the general community, because it just feels like a fraught time at the moment.
It does, and it almost feels like just the time when the pandemic started, and there's fear that there might be lockdowns and mask wearing again. So I feel that the fact that they haven't taken the health advice, that's a political decision, where previously the decisions, as hard as they were always stated that they're following the advice from the medical people, where right now they're saying, we know that's the advice, but we're not going to take that advice. That's purely politics, and we have an election in Victoria later this year. That's partly the reason, I'm sure of it.
Interesting discussion there. CoreLogic property prices. This is another indicator that we're focusing on more and more on this particular program. But you can see that what we said was potentially insignificant in previous months is now becoming quite significant. A drop in dwelling prices month over month of 1.6% in Sydney and 1.1% in Melbourne, and the capital city aggregate, the 5-city aggregate, down 0.9%. This is going from shaving 0.1% here and there to some pretty sizable month-over-month changes.
Well, when you shave 1% this month, 1% last month, 1% the month before, the second line there had 3.1% year-on-year change for Melbourne. That's positive 3.1%. But remember when that was up around 12 to 15% positive for the year. So these 1% have just been carving away at the annual change. And I can tell you, the real estate industry are absolutely feeling it. They've had agents who have to go to people who are putting their house on the market and tell them their house is worth 150, 250,000 less than what it was 12 months ago. And if you want to put it on the market, this is what you're going to have to accept. And people are struggling to deal with that.
I think the other thing is that, as you say, the property prices were forced up during the pandemic by this lack of supply. People didn't want to sell their house. It was too turbulent. Now we feel like we're through this. Okay, let's put the house on the market. Let's go through with that change we were going to make 2 years ago. And there's perhaps more supply but less demand now with interest rates and everything. And you know, you would expect supply to go up even further as people unfortunately default on mortgages with with regards to the higher interest rates. So it's an interesting time ahead for the property market.
Interest rates go up, which means the borrowing capacity of the purchaser goes down. And if they're buying a new property, the house price that you thought you're going to pay for a new build has gone up by 30 to 40%. So new build house prices are going up and you can't borrow as much. So it's going to reduce demand.
Let's have a look at the ASX 200 1-year chart. Just for context, you know, you can broadly invest in property or you can invest in the share market, as some of the sort of traditional investors would say. Obviously, there's far more avenues than that. But, you know, for the mum and dad investors out there, those are the two main options. You can see year on year that the stock market is down. So even looking at it in a sort of short-term context, we can see that we had some pretty sizable falls throughout May, and maybe just a slight flattening out in the recent weeks.
It's an interesting graph, this, because our wealth management team that look after not just people who are doing a roadmap to retirement and beyond, but just investors and what to invest in, they often get asked when is the right time to invest. And the response is always now, because you only lose money on the stock market when you sell. So if you've seen the market drop 15% in a year, you just don't sell. You know it's going to bounce back. But the interesting thing is, given where the market's at now, generally, now's a good time to get into the stock market. So make a time with your wealth manager or your financial planner, because I generally believe you should be looking at that very soon.
Plenty of questions that have come in this week from the viewers, Roy, being tax time and everything. Let's have a look at the first question that's come through for Roy's tax tip. I live in Victoria and own a rental property in Queensland. I need to travel to the property to do an inspection and organise some repairs. Can I claim the costs of the airfare and accommodation to visit the investment property? Interesting question.
To this viewer, 4 years ago, the answer would have been yes, we could claim travel to an investment property, but the government have changed the rules. We can no longer claim travel. So the accommodation, airfare or any kilometres are not a tax deduction for you to travel to your investment property. The government closed that loophole, and I understand why. Dave, you and I could have bought a house in Paris and have to go and inspect it every couple of years and claim the travel as a tax deduction.
Couple of years, I think every couple of months, Roy.
So you can see why they closed it down. I think the system was abused, so we can't claim travel to an investment property anymore.
Federal government that legislates on this, or state government?
Definitely federal government.
Federal government. Okay, next question. Up on the screen here is, I've been requested by my employer to get a flu shot this year. Can I claim the cost of a flu shot as a tax deduction? Yeah,
great question. You would normally think the answer is yes, because you've been told to get it by the employer, but the flu shot is classed as medical, and medical is not a tax deduction on your tax return, even if the employer tells you to go get a flu shot. Secondly, flu shots are free, I believe, so you haven't paid anything, but maybe you were inquiring about the travel to get the flu shot, but you can't claim that either because it's related to the flu shot. So sorry to that person, you cannot claim the flu shot as a tax deduction.
Final question for today. You've done well so far, Roy. Plenty of hard ones today. I work from home and have done so since the pandemic began. I am on Zoom for meetings 1 day per week, and my dog yaps the whole time. I now put the dog in doggy daycare 1 day per week. Can I claim the cost of doggy daycare?
No, you cannot claim the cost of doggy daycare. Awesome question, but it has the same application in law as it does if you have a child at home who's crying or whinging, or a young child you've just got to care for. If you put that child into child care, can you claim that because it allows you to work? The answer is no to that as well. So the doggy daycare is out, I'm afraid.
Maybe like childcare, the answer to that is government subsidy. They should put a government subsidy in for
doggy daycare.
For doggy daycare to allow people to work from home. Roy, it is tax time, as I mentioned, and every year the ATO comes out with some statements to talk about what their areas of focus are to make sure that people are compliant with their tax returns. What are some of those areas of focus for the ATO?
So the audit targets for this year, I've listed some out. Cryptocurrency, if you have bought cryptocurrency and that's all you did, there's nothing on your tax return. But if you have exchanged one currency for another, or sold or mined, then it must go on your tax return, and the tax office already know about it. Rental properties, they're targeting interest where people have accidentally claimed interest and principal. Only the interest is a tax deduction. Car costs, they're requesting logbooks, and they're doing this on some occasions before they've issued the refunds. So we're seeing letters to clients saying, send us details of your car costs and your logbook. More work from home hours. So if you're putting work from home, let's say 48 weeks at 40 hours per week, that means you're not going to have the uniform cost, you're not going to have laundry of uniform, and you're likely to have less travel. So they're doing some data matching on that. And this new letter that's coming out that we're seeing, they delay the refund by 4 weeks and give you an opportunity to send in your information and evidence of what you put on your tax return, only if your deductions are outside benchmarks. And if that happens, you've got 4 weeks to supply the information. If you don't, they do the tax refund on the basis that none of those deductions are allowed. So you've really got to respond to the letter if you get one.
It's interesting. I think that, and for context, Roy, you can definitely talk to this in more detail. Like, this is the ATO of the 21st century, because there was a time where you'd get the letter and it'd be for 3 years ago, and you'd have to dig into the archives to find all your receipts and stuff. So I actually think that this is better, where there's more immediate. You're not thinking about things from 3 or 4 years ago. They're getting on top of it before the refund's issued, and you don't end up with some gigantic debt that you couldn't substantiate your receipts. And
the ATO sent out warning letters a couple of months ago, which went to, I don't know how many thousands of taxpayers, but warning them that they have to have the evidence and they have to have spent the money and not be reimbursed by the employer. So this is just a backup. And if you're outside benchmarks on any of the claims that you make, whether it's car-related or work-related or donations, if you're outside the benchmarks for your occupation, then the chances are you will get this letter. So think carefully before you just invent figures. Make sure you've got the receipts for them.
Energy is a big topic in the community, and the cost of energy, the cost of gas as well. But Roy, I feel like there's a lot of noise in this space. There's rebate here, or there's this subsidy there, and there's, compare the market, etc. Sometimes you feel like it's a bit of a scam because there's so much noise. But this is one that you wanted to address, the Victorian Energy Power Bonus. Tell us a little bit about it.
I did, because it looks like a scam. It looks like somebody's going to want some information off me that I don't want to give them.
Yep.
So I actually did this morning prior to coming here, and it took me approximately 7 minutes. I had my energy bill in front of me, so I was able to type in some figures about it. I also had to have my identification, so I had my driver's licence. They haven't, and I just had to take a photograph of that and attach that. They didn't ask for bank account details because they're going to send me a cheque to my address where I reside, which they get off the energy statement. So it's legit. It's $250, and if you do nothing else today except that's going to get you $250 for about 6 to 10 minutes work. I strongly recommend you do it.
And you get a physical check. I like that. That's something that you don't get off very often.
It's interesting that the state government, because that's state government driven, would be sending out checks. It sort of surprises me. Maybe it's a security thing, but I haven't seen a check for a while, so it's going to be interesting tripping down to the bank to bank a check.
Roy, time to chat with a very special guest today to join us on R J Sanderson TV. He's an executive coach and he's here to chat about his business. Great pleasure to welcome Gordon Jenkins to R J Sanderson TV. Gordon, welcome.
Thank you. Thanks a lot, guys. Thank you for having me. It's a pleasure.
Gordon, tell us a little bit about what you do and the clients that you work with.
Absolutely. So I am a business growth coach or an advisor. And let me put that in really simple terms. What I do is I bring the action to the vision through a human-focused framework. So let's think about whether it's your personal life or your professional life. And we all have long-term expectations. What I do is I bring it to the now. So let's start unlocking what's actually happening now, and let's take the opportunities right in front of ourselves.
Gordon, what actually got you into this business?
Oh, how long have we got? So let's go back. Let me tell you a really, really quick story. When I was 5 years old, my family had a business similar to Repco in Australia, back in the UK. And I learned from a very early age that nothing in the shop is free. It's all about people, and it's all about their outcomes. And the earliest memory is a customer coming in for products to wash his car. And it wasn't washing the car that was important, but showing his clean car to his friends. So we took a photo of his clean car and we put it on the wall. And guess what? He brought his mates in to show off the photo, and his mates became clients. Now, fast forward that 40 years, I've continued to focus on people in business. I tend to work in organizing industries that are very price sensitive. So we need to be able to promote ourselves other than just price. And it's about understanding people. And I just love working with people that want to make a difference.
Gordon, what's one of the common messages that you would give to businesses or individuals when you're doing your mentoring coaching?
Okay, so this is a great question, right? Because most people think it's going to be something really fantastic, really, life-defining. And it's really simple. And it's really simple. And it doesn't cost you anything. It's about gratitude. So the first thing I do with people is focus on themselves. So just give yourself 5-10 minutes and just think about 3 to 5 things that you are grateful for today. So for example, I'm grateful that, yes, again, Roy, we're interacting with you because we have a great synergies together. I'm grateful to my coach. I've got a coach who's based in Mexico, and she's gone out of her way to fit me into her schedule tonight. Tonight's her time. And I'm grateful to my local cafe owner who's going out of his way to put breakfast on for a few clients tomorrow. So those 3 things I'm really grateful for. And I've actually told the people that I'm grateful for that. So one thing I want to share with people is a common message is be grateful, write down what you're grateful for and share them, because the outcomes are amazing.
They certainly do work. When you write down what you're grateful for at the end of a day, you can say, actually, it was a good day. You might have had some bad things happen, but it was a good day. What about specifically for businesses? Are there any messages you've used more so for businesses?
Absolutely. So when we talked at the beginning is I get into businesses, and business tend to think about their big problems, and we break it down and just think about this. If there's one problem and you could improve it by 1% today, what would that difference be? And if you did 1% change to your business incrementally over 100 days, you get 100% improvement on your business. So what I ask businesses to do is think about what is one thing they could do 1% better. Can it be technical? Can it be physical? Can it be operational? Can it be practical? And what's the accountability that you're going to demonstrate in the next 30 days to increase that 1%? And what's the outcome? What's the demonstrated behavior? What's the human benefit? And what's the financial outcome as well? So just think about improving your business 1% a day for the next 100 days.
Interesting point, Gordon. For those that are watching at home and would like to get in contact to help better their business or themselves, how do they make contact with you and get involved?
So I'd like to make things really simple, if you haven't gathered already. So my name's Gordon Jenkins. My website is called iamgordonjenkins.com, and my email address is gordon@iamgordonjenkins.com.
Very simple, very easy for people to get involved. Thanks so much for your time today on R J Sanderson TV.
It's a pleasure. Thank you.
Gordon Jenkins there, who had some interesting insights there, Roy. And, as he alluded to, sometimes, the simple things and executing them really well is what's going to make the difference between a good business and a struggling business.
Well, I'm going to fess up here, Dave. We used Gordon Jenkins for a function fairly recently where we were talking about culture and alignment within the organisation, and he was excellent, and his messages about the 1%ers are carrying on within our organisation, where we're asking every team member, what can you do differently and what have you done differently? Because those 1%ers can really add up, and they can be the smallest of things, like use a client's first name when they walk into the office. It's not a big thing, but it creates a personal relationship. Offer a cup of coffee. And I've got a list of probably 100 of these items that are 1%ers that we will roll out and try and improve to make our business better and to make our clients' experience with RJS better. So thanks to Gordon, he's been very good. It's one of the reasons we got him on the show.
In the spirit of showing gratitude and focusing on the positive, for the first time in R J Sanderson TV history, we've sacked Roy's rage. We couldn't find anything to rage about on such a special morning where we're all feeling happy and positive. So in place, Roy, I did want to talk about something very quickly before we finish. As part of the review of Treasury, it looks as if the federal government is going to tackle some of the economic indicators that we talk about on this show all the time. Now, we know that there are inherently discrepancies between numbers that appear to be good and the community sentiment. We see that every day at the moment with unemployment, a low unemployment rate, and falling consumer confidence. So we know that there's discrepancies, and as such, it seems as if there's a sentiment within Treasury that these numbers need to broadly adapt to reflect community sentiment and community expectation. We know that climate change is a big topic within the community, and it makes sense to model economic indicators to measure how we're going against climate change and include that in the daily or in the monthly or quarterly suite of economic indicators. So I think really looking at these indicators, at things like GDP growth, and do they represent what success looks like for a community broadly, is going to be a really important part of the review, and I think it's a welcome part. So that's my editorial for the day.
Well done. Yes, climate change, very important, and if it's 9 years since they've done this sort of analysis, certainly it's time to do it now.
Roy, we're out of time. It's been great fun today, as always. What are you looking forward to for over the next month, and what are you thankful for today?
Oh, I'm thankful that I'm here. It's great. I'm positive. I'm up and about. I love July, August, September when we're busy with personal tax returns. We have people either doing face-to-face or phone appointments or going onto our website and just putting their information on our website. It makes it so easy for them and for us. And we are a good news accounting firm. I love telling people what their refund is. Most times they're all smiles, and we enjoy it. If somebody has to pay tax, 99.9% of the time they already knew because they've sold something or there's a reason that they've got a tax bill. So I love it. I love this time of the year.
Fantastic to hear. Thanks so much for joining us, Roy. It's been a pleasure as always. And thanks to you guys at home for watching R J Sanderson TV. Until next time, thanks very much for watching.